Catherine Karita. I'm the Executive Director in charge of the Brokerage Division of NCBA Investment Bank. What we do in the stock brokerage division is act as an intermediary between the investor and the investment activity within the stock exchange, within Kenya, within the region as well. So we are able to get investors within different asset classes. We talk about equities, we talk about fixed income, and we're talking about derivatives. We also are able to do research so that our customers can be well informed on what investment opportunities lie ahead and in terms of what returns we anticipate in different asset classes as mentioned. So we are able to do research as well as do the actual execution of the trades on behalf of our customers. How has been the market response to COVID-19, one may ask? Given the whole, sort of global markets perspective, where we've seen valuations drop 50% across different markets in the world, Kenya has a drop of about 25.9% in valuations. If we're tracking the NSE 20, which is normally your reference point, NSE 20 has now dipped below the 2,000 point margin and has lost 25.9% year to date. So a lot of this movement, downward movement, has happened within the month of March and in April. So it hasn't been a very positive story because there's a lot of fear of what investors should do with their money. There's also a lot of uncertainty because a lot of the sectors, listed companies, are going to get affected one way or the other in terms of moving forward, in terms of their projections, in terms of their profitability. And that's something that investors think about, particularly now that they're already in the markets and their portfolios are down. And what do you do with any surplus cash that you may have? So there has been a bit of a negative reaction, but it's not all sad because there are investors who can see this as an opportunity to get in because the valuations are at an all-time low for some of them, and an opportunity then to grow bigger returns in the future. Remember, investing is always a long-term journey, and we always see the up, the up and down movements of the market. So it's down now, and the story is bound to change, particularly as we continue to work so hard to make sure that our curve doesn't sort of peak. I think Kenyans are doing a good job in terms of making sure we're following the directives and making sure that our cases are not as eruptive as we've seen in other markets. So currently a bit down, but do we see opportunity in that? Yes, we do. Should one be investing or divesting during this season? Well, that's a good question, and it can have a number of answers. Because one, if you're already in the equities market and you're looking at your portfolio and it's quite red, you might be thinking better to just sell and hold on to the cash. But once you've gotten such big losses, and the losses are not actualized because they're paper losses, and the question to ask is, can you then invest that money in a product that will cover your loss and give you a higher return? And then two, if you're already in the markets and you're in the fixed income asset class, and you're also maybe in other asset classes, do you grow the fixed income assets a bit more because there's a stable return there? So perhaps the right way to think about it is maybe it's time to rearrange your portfolio and have a good mix of what you'd call fixed assets in terms of you have a fixed return vis-a-vis what you may have in the equities market. But if you are in need of the money, then of course you might want to sell because of course the pandemic brings with it a lot of other issues. But if you do not need the cash at the moment, then we would advise to just hang in there and ride out the wave because the bottom is coming and there's no need to then book that loss at the moment. Earnings expectations for 2020. We are still in the wave of reviewing 2019 because banks just finished their earnings season in the month of, there'll be a mixed bag. There's some sectors that will be hard hit in terms of this year's revenues and this year's budgets and this year's sort of targets. Because if you're in transport sector, if you are in hospitality or tourism sector, if you are in other business lines like even the breweries, because a lot of this curfew comes with no going out and therefore people are home and people are not spending the money they used to spend in restaurants or in social gatherings, then some of those sectors will be hard hit. But then again, there's a flip side to that because other sectors have gotten an upside from what we're seeing. And sectors like the telecom sector, so Safaricom, say in Kenya, will gain a lot from this because there's a lot of demand for data. So there's a lot of demand for even internet connectivity in the homes as people are starting to work from home. You also have other, and not just say Safaricom, but any of those providers of internet or home fiber and things like that. And also banks, because banks have for the longest had platforms to enable their own customers to trade from home and to reach their bank from home. And the message has never been clearer than now that you can stay home and still bank because the platforms were there. And I think we'll see an upside in terms of online banking, mobile banking, and those digital platforms that are already in place to replace the brick and mortar store. So there are some stocks that will present good opportunities. That is post 2020. So we'll see their earnings in 2021. But right now, as we speak, we're looking at earnings from 2019 season, and most of those are not bad. The only issue you have is obviously the investor reactions to what is happening now. That's causing the sort of deep in valuation that we're seeing. So there's a saying that cash is king, particularly in times of uncertainty. And I would say two things about that. One, it is important to have cash. And obviously we talk about as financial advisors, ability to sustain your livelihood for at least 6 months in terms of your savings and deposits. And then secondly, this emergency fund we're talking about now cannot be a fund that is just there idle without any possible return to someone. So I would say cash is king, but we are also seeing a lot of opportunities to save on that cash, because when you're staying home, one, you're not out in the malls shopping, you're not out with your friends for dinners and all this. So there's also a lot of opportunity where this cash is coming just by the fact that we have to stay home and stay indoors. And maybe that's the kind of cash people should be saving. We just came off the Easter season where a lot of people travel for Easter, whether it's to the coast or out of the country. So that's money that they've had to save because they did not take those trips. So those are opportunities to put that money aside as your emergency fund. And what do you do with that emergency fund? You can put that money in a fixed income asset class. You could buy a 1-year bond. You could buy a 6-month treasury bill. You could also invest it in a money market fund, which we also present to our investors as the investment bank. So your emergency fund can grow every month by the virtue you're staying home. Some of us are saving on fuel costs and all these things, and you can get a return on that as you grow it. How do we access markets given the stay-home orders that we have? Well, at least for the longest time, NCBA has been investing in digital platforms and in accessibility on our website and on our mobiles. So the brokerage division is no different. We have a very good product called the NCBA AT Mobile, which allows our investors to just buy shares or sell shares from the comfort of their home. And it's available on Apple Store or Google Play. So once you download this, you're able to log in and do your transactions by yourself or at the convenience of wherever you are. And in case of any issues, we're also reachable on phone. The same platform is available on our online platform, where you're also able to go online and buy this shares. We've also made it very straight through, even in terms of our funding ability, where you're able to move money from M-Pesa to your trading account, or we're able to move money from your bank account to your trading account. So yes, you are able to trade from wherever you are. So stay home, stay safe, but still invest where you can. So the biggest question we get is, do we sell now that the markets are low and maybe invest later when we have a way forward, a clear way forward? My response to that is, sometimes the best returns come when you do what is unconventional. And obviously the fear and the investor perception is, let's sell and then we'll come back to this when we know where we're going. But it might be too late then, because once the market starts to react, and I talked about market volatility, where sometimes you find that markets are rising 2-3 days in a row and then dipping again, is that when the valuations are this low and there's nothing wrong with the underlying company from a fundamental perspective, then it is the right time to buy, because then you maximize your returns and you're able to get in really cheap. And it is unconventional, but that's when most investors who have benefited in the stock market gain the most, is taking a contrary view to what everybody else might be doing. The mentality now is run to safety, markets are not safe. But my contrary view is that this is the right time to invest, because you can never get the shares at this level. And again, the fundamental investment itself, the actual aspect of what you're buying has not changed. It is just what we are looking at in terms of the uncertainty of this pandemic. But that too will pass. And maybe by the time it does, it might be a bit too late to get into the equities market, because sometimes stocks rise 10% every day, and within 3 days, you're looking at a 30% high, which you have missed the wave. Secondly, if you do not want to put all your eggs in one basket, which again, we agree you shouldn't, then you could still invest in government bonds. And the government is looking to borrow and is issuing out papers every other week. So those are also good opportunities for you to invest in your country and get a return. Do we have safer assets than just buying shares in the market? The answer to that is yes. You are able to invest in government bonds. They're short-term bonds, they're long-term bonds, they're infrastructure bonds. You are able to invest in money market funds, which is sort of a basket of bonds and fixed deposits, which give you sort of some guarantee in your return. And also, if you're already in the equities market and it's not looking pretty, then you are also able to invest in the derivatives market, which allows you to take a hedge position against your actual portfolio. So if you feel that strongly that the market will continue to dip, then you're able to take a short position on the derivatives market and therefore book some profit as your actual portfolio is sort of affected by what's happening. So there are different ways you could invest your money. Even within the bigger NCBA group, we can also give you deposits, fixed deposits, which will allow you to generate some interest as you decide where else you'd like to invest the funds. How can you tell when when the market gets to the bottom? It is a very hard point to determine where is the bottom. And that's the sort of the million-dollar question, is where is the bottom of the market? But I really do not have an answer to that question. Sometimes the bottom comes, and before you know it, within 3 days, you could have thought it was a volatility spike. The market is on an up and up run. So the idea is to ask yourself, on a valuation basis, is this stock worth the price that is being sold at in the market? And if you have sort of an idea of what the value of that stock is, or what the price to earnings is, you're able to then make an informed decision on is it a cheap buy at the moment you want to get in. And if it is, even if the market continues to dip, you know you're able to accumulate more as it goes lower. And two, you know that at some point, there is that valuation you had in mind where the stock will tend to turn around and reach 20-30% gains as you had probably anticipated. So I think the best strategy is understand what is the actual valuation of the company you're buying vis-a-vis what is the actual then price in the market. And if you see the upside based on the valuation, and some of this we do for you already, because we have research reports that talk about target prices, that look at the price to earnings, then look at the market valuation, and we say, look, the market PE is quite low. That should be an indication that things in the market are very cheap from a valuation perspective. So we can guide you on terms of valuation, so you don't have to do that yourself. We do cover a couple of companies in terms of the banking sector. There are about 8 companies we cover there. We cover the telcos, we cover the breweries, and soon enough we'll also be launching a report on the insurance sector. So to give you a view of where we think the stock should trade at fair value, vis-a-vis where the market is. And that should inform your decision on whether to buy or not, as opposed to trying to figure out where the bottom of that curve is. Because most of the time, it turns very quickly and people do not, get it at the bottom. Yeah. So how do you invest with NCBA Investment Bank? How do you get a trading account? Well, it's very simple. We have account opening documents within all our branch network. We also have this forms available on our website. You could also call us, and we're able to email you the account opening documents, and the contacts are available below the screen. And once you complete this documents and obviously put in the required documents we need, like your ID, a copy of your ID, a copy of your carry PIN, and a passport photo, then we will be able to open that account for you within about 2 to 3 days. Remember, also CDSC is involved in this process, and currently with people working remotely or with sort of smaller numbers, they're taking about 2 days to open accounts. So we're able to get this account opened, email you the details, email your account details so you're able to fund. And again, funding is from bank to bank, Pesa Link, M-Pesa. And once you're able to fund your account, then you're able to start trading. It's that simple. Just drop us an email or give us a call, and we're able to send the forms to your email, and then just print them, fill them out, and drop them out in any nearest of the NCBA branches available or closest to you. In these times of uncertainty, my message is, even as we continue to hear a lot of news of COVID, and most of it negative, and most of it, gives us stress, anxiety, worry, it is time to think about your investment. It is time to think about what will a year from now look like, and if possible, what kind of investments do I want to have now that the markets have a lower valuation. I would encourage all of us. Investing is a long-term journey, so to look at this opportunity as an opportunity to get in the exchange, the stock market, if we haven't already had an opportunity to do that, and also a time to, as we take care of ourselves, to take care of our investments. Let's not forget that we need to invest for tomorrow, for a brighter future. So let's stay home, let's stay safe, and let's keep investing.